another edition of Taking Stock, the show where we give you a dose of what took place in the week gone by and tell you all the action that you can expect in the week to come. I'm Sonia, Shenoy, and with me is Anuj, Singhal. Hi Anuj, it was a good week for the market. We ended on a high note. We rallied about 1% on the frontliners and the mid-cap space, but all eyes will be on the event on Sunday.
Yes, all eyes will be on event on Sunday, but Friday's market action was telling you that the market maybe does not care too much about Greece. The market went into the event with long positions at the high point of the week. The bank nifty was outperforming, but all through this week, Sonia, volumes were low. That's a bit of a worry, and the market has now entered the zone from which it slipped last time. So next 100-200 points absolutely crucial on the Nifty. Whether Greece is actually a trigger for the market to now rally from here on, another 100-200 points, which would suck in a lot of people at higher levels. That's something that we'll be watching out for. But I think next week you should have a definite trend for this market. This consolidation between 8,400 to 8,500 is likely to end. And as of now, you would want to believe that the market would, at least for a bit, trade above that 8,500 mark.
Okay, all right. Well, let's do one thing. Let's get two guests to tell us what their own view is. We have Sanjay, Dutt first up of Quantum Security, who joins in. And in a bit, we'll get a technical expert as well. Sanjay, hi. Welcome to the show. Is that the sense you're getting, that the market doesn't really worry too much about some of these global headwinds? And even if there is any adverse reaction on Monday, then it will be used as a buying opportunity?
I disagree with the view that the market is not worried about the events that are happening in Greece, because those events impact the entire euro area directly, and obviously then indirect implications across the world to various funds who have, cross-linked exposures, etc. And obviously it has a lot of impact on currencies worldwide. My view is that Greece is not going to sort out on Monday morning. We'll just have the referendum, but the haggling, the push and pull will carry on whichever way the vote goes, yes or no, because it's only a political vote on the Prime Minister Tsipras. So I think the whole problem will not be resolved that easily, because ultimately a deal has to be thrashed out. The referendum is only probably an indicator to that, as to what kind of deal would be politically palatable to the citizens of the country, and what kind of deal with the politicians there in Greece be able to live with. But ultimately it will be the Eurozone who will discipline Greece. That's what they're sticking to, and I don't think that they're going to budge on that, because they have bigger implications. Now, given this backdrop, to really cut a long story short, I think a lot of flows will depend on this, because kind of exposure people have when the event actually happens, whether it's whether it's a positive or a negative event, you will still get a reaction. And while I agree with the fact that if we do get a negative reaction here in India because of events in Greece, the market falls to 300 points or whatever, that is an opportunity for investors to come in and buy. There's no second thought about that, at least. But short-term uncertainty, volatility, I think we'll have to live with for a few weeks. We're also heading into result season. Monsoon has gone into, a lull at this point of time. So we're probably at the upper end of the very short-term trading range.
Okay, Sanjay, that's interesting, because last two times you have got it right in terms of the Nifty going to 7,900 and seeing a bounce from there. Do you think it will repeat itself out? Maybe one more move towards 7,900, or maybe even lower? And what could be the catalyst for such a move?
No, Anuj, I don't think it will go down to 7,900 or lower than 7,900. I think the 81, 82 zone should be sacrosanct. And the worst case situation, that earlier low we saw. But my sense is that even if the worst negatives play out, 79 would hold. But it's all a question of flows. If you look at it, why the situation has been so tepid and dull is because, there is a lot of uncertainty with regard to flows. Flows have slowed down. So therefore, what is keeping the market up is domestic buying. What is keeping the market up is the domestic sentiment is relatively positive right now, both in terms of the reform announcements and what the people feel about the long term in terms of the institutional investors sitting back home. That's what has got the market where it is, and we managed to rally given all the negatives surrounding around, whether it's China or whether it's Europe, etc. Europe has been quite negative this week. China has been really in a bad shape. So I think to summarize, basically 7,100, 8,000 should hold. I don't think that will really break in the near future.
Okay, so that's about the downside that will hold. What about the upside, Sanjay? Do you think that there is enough momentum to keep this market going to a new high by the end of this year? Or do you think that once again worries like earnings deterioration will come back to haunt us?
Yeah, that's a very important question, Sonia, because that's what really we all are really, gathering our heads around and trying to grapple within our own group here. Amongst our trader friends, analysts, as well as within our company, because the outlook is still a tad uncertain. While the reform process momentum is keeping the market up, the numbers on the street are not changing. On the street, I mean the real feel that the companies are getting in terms of liquidity, etc., in terms of the traction, is not there as yet. But there is optimism. If you talk to the CEOs and the CFOs, they're quite optimistic that towards the latter part of this calendar, sometime around September, December, they see a phenomenal uptick. Of course, some of the early data that we've seen in the last week, 10 days, IIP, etc., and a lot of other data are pointing towards the early signs of, a good uptick setting in the next 12 to 18 months. And, if some more data points point towards that, then I think 100, 200 points from here, a rally of 100, 200 points here can be expected in the next month or so. And also, obviously, we're getting into the result month now. Like I mentioned earlier, what happens to July monsoon? There is a complete divide amongst the forecasters there. So if July monsoon turns out to be positive, as it was in June, which was quite unexpected, and we have reasonably better than expected numbers because June quarter is expected to be quite bad, I think then we are setting ourselves for a 200-odd point rally towards the second half of this month. But otherwise, I think we are fairly valued. We'll continue to consolidate plus minus 100 points from this level. I don't see anything higher than this.
All right, Sanjay, let's talk about some stocks and sectors then. We have seen quite a bit of correction in IT names, though on Friday we saw recovery in stocks like TCS. Tech Mahindra continues to look quite weak. What's your sense about the IT names? Do you think most of the derating is done, or do you see further derating maybe after the numbers?
No, I think most of the derating is done. In fact, I'm a tad optimistic on the IT space selectively. And I think if, in the worst kind of patch for the West, the IT stocks and the IT fundamentals have held up, I don't see any reason why we will see the stock prices much lower than the current levels. Of course, barring 5-10% movements you keep getting. But, select stocks like Infosys, etc., I think they would be good plays, and they should be part of their portfolio. I really can't game the next 2-3 weeks or a month or so, but I'm optimistic. If results do give an opportunity, they do correct, it's a time to buy into them.
Okay, so a time to perhaps buy into the IT space if the results give an opportunity. But what about a space like FMCG, Sanjay? In the week gone by, we saw a lot of good quality mid-cap FMCG names, the likes of Dabur, Imami, Britannia, do very well. Jubilant Foodworks was another case in point. Is this a space that you would be looking at in the near term?
Yes, in fact, we've been seeing this for a while now, and I'm sure you would have noticed it too, that the kind of moves that are there in the Tier 2 FMCG names have been much better and much stronger, and they've shown much better strength on the positive side compared to, the top-heavy names, because they are not only priced to perfection more or less, but they are over-owned, most of the bigger names. And that's the reason why people are starting to look at, the likes of Dabur, Marico, and these stocks. And I think they will definitely show better growth. And they have a good appetite. We've seen some acquisitions coming in. They have a good appetite to look at some, Tier 3, Tier 4 brands also. And they're able to decide much faster compared to the bigger companies. And they're very aggressive in the market at this point of time. So I think selectively, if I want to look at the FMCG space, it would be in the second tier names and not in the tier 1 names like the kinds of levers, etc.
Sanjay, we have a monsoon session coming up, and there's a good, good reason to believe that not much business will be transacted during that session. Maybe even the land acquisition bill may also not be there. So, do you think that could be a bit of a problem point for the market, and that could be a bit of a catalyst for correction?
Firstly, I disagree with that view. Contrary to perception and contrary to what we all are expecting and reading and hearing across media, I think the session is quite some time away. And in politics and, the machinations in Delhi, 2-3 weeks is too long a time. So I'm quite confident that by that time, the government would have thrashed out a deal with the opposition, particularly the friendly opposition, and would try and push through some of the key bills that have been pending, irrespective of the posturing that we are seeing from the opposition and some of the stuff that is coming out. But let's go by the assumption, even if that doesn't happen, I think there's enough scope just in pure executive orders and executive powers to do a lot of stuff, which we're already seeing in the last week, 10 days. The government is aggressively sorting out, whether it's got to do with MAT, they are working on it, whether it's got to do with other issues we heard yesterday about the national market. Now, ideally, we would all like the APMC to be, demolished completely, but obviously it can't be done because they are politically sensitive issue in terms of state revenues, etc. So I'm not too worried on that reform front, because I'm quite sure that, the current Prime Minister and the current government is very clear on the economic agenda. They know the only way to get development and growth in the country is to ensure that ease of business keeps improving. Money keeps coming into the country, because that's the only way we'll be able to roll out infrastructure and fan out orders and actually revive the investment cycle. So I'm not that too worried about the parliament session being wiped out also, but of course I still hold my view that it would be a productive session, not as we expect it to be, because it's still some time away.
Thanks for your thoughts as always, Sanjay. We'll take a break on that note, but as we do that, let's listen in to some market opinion that we heard through the course of the week.
We're pretty optimistic about what's likely to happen, but it's a very slow shift even now, so most corporates necessarily aren't feeling it, but I guess it's a matter of time. I don't think right now one should take the view that our equity markets are overvalued. Definitely not. I think they're fairly valued. Relative to the rest of the world, we're actually trading at much lower valuations than what we've historically been trading at, particularly the developed world.
I think more than fundamentals, I think clearly the markets are taking cues from the external events that we've seen in the past few days, and most importantly Greece. The markets today, as generally in any shorter period, are driven by news and sentiments and not really fundamentals. So I think to kind of see a direction really in a very strong sense going forward, I think that's a little bit more incoming, because we don't see the fundamental numbers yet. And as a result, I think the market is going to relatively be choppy over this period of time.
This is a repeating pattern which happens every few years in global markets. I don't think it's something new. And the bottom line is that whenever any of these asset classes gets disturbed in a very significant way, there are drawdowns that happen in other asset classes as well as a corollary. So while this time around the focus might be on bond markets, history tells you that it doesn't matter which asset market is disrupted, the other asset markets also see a cash call, because people are trying to rebalance. So I think from that point of view, if there were to be conflagration, you should worry a little bit about the scope for money to get pulled out of all equity markets, and I think all equity markets will be at risk.
A lot will depend upon how the events pan out. I mean, clearly what happens over the weekend in Greece in terms of referendum. Do they stay in Europe? Do they go out of Europe? If they stay in Europe, do they get the treatment which will encourage Spain, Portugal and Italy to also follow their route? Or if they go out of Europe, what will be the future implication about the European Union? There are too many questions which the world has to answer, and while they do not impact us directly, our markets will have no option but to watch out carefully what happens over there. If market goes below 8,000, it becomes very attractive to buy compared to today's level.
There was a lot of reallocation of global funds towards the Chinese markets in the last 3 months. Money moved out of other emerging markets and fresh money was getting allocated to China. And if China does slow down, then I think you will see that people will see the India trade, a little more attractive. especially given that there is so much of spend on skill development. We're pushing up spending money on the rural economy through agriculture, and the reform process seems to be clearly on track. And if you look at the macros, I think most of the macros are in place.